Hi, I'm Federico Campo, Managing Director of WhereInRio, a luxury property company here in Rio de Janeiro, Brazil. Today, I would like to introduce the market here in Rio and give you some argument about investment here. But before that, I would like to introduce my company, WhereInRio. After the presentation, I will be glad to answer to all your questions. I started WhereInRio in 2008 when I noticed a gap in the market. Europeans really wanted to buy or rent luxury properties in Rio, but there were some major concerns about trust and working with Brazilians. Therefore, I could address this concern, and I started a company with an international heritage and a European service outlook. So, we all know that Brazil has recently surpassed the UK to the fifth place in the world economy, and how much we hear in the global press about Brazilian economy and how is a wise choice for investment. But let's distill into clear facts to review how the wider economical climate has affected the property market here. The average residential rent in Rio de Janeiro increased by 21.4% in 2011, according to information for FIBSAP index. In the exact same period, rental prices in Sao Paulo increases by 14.5%. The rate used to adjust rents, the GPM, however, rose by just 5.1%, 4 times as less than the increase witnessed in Rio. This shows that Rio is leading the way in the Brazilian rental market. Let's have a look on sales now. The price of the average square meter in Rio rose by 34.9%, the largest across Brazil. Brazil's most expensive real estate is in Brasilia, with Rio, hot on its heel, at an average of 7,421 reals. With its two most expensive neighborhoods, Ipanema and Leblon, both more than double this figure. It's easy to see that in the current climate, property is a wise investment. But the question we have to ask and answer remain. Is it the market stable, or are we going to face the same crisis as in US and Europe? Demand for real estate is likely to remain particularly strong due to factors such as lower employment, a rising middle class, and a wide-scale industry growth. The price movements in recent years have investors questioning the realism. Prices are increasing at an over-accelerated rate. According to research by Exam IPOP, asking prices for properties have risen by 24.7% in Sao Paulo in the last 12 months, and prime-valued properties in regions such as Zona Azul of Rio de Janeiro match those of luxury stock in Miami and New York. Secondly, the rapid increases in the level of mortgages being sold and awarded 65% increase in 2010, there are no concerns regarding the limited supply of finance available via the National Saving and FGTS, the Guarantee Employment Fund. Whilst there is an increase in alternative finance mechanisms, such as certificates of real estate receivable, the mainstream bank needs to find another form of capital to feed the rising demand, and with limited supply, it thought that prices will continue to remain elevated as a result. Thirdly, according to research conducted by William Head Jr. of Getúlio Vargas Foundation, the Brazilian buy-to-let strategy have shown signs of weaknesses. These findings have shown that the rapid rises in prices have not corresponded proportionally with rental receipts, meaning yields have dropped. Finally, with the national interest rate, which has increased from 8.75 to 12.25% in the last year, in an attempt to stem the effects of an inflationary market, many Brazilians are taking advantages of competitive saving levels offered by banks. So, there are some real concerns that fluctuation may affect stability of the market. Let's look at the other argument in support of sustainability of the market. The Brazilian property market has actually remained in a deflated level of value for over 20 years. The rapid increase in prices form part of a natural correction of the market. Research by JP Morgan showed that the average value of property in Brazil corresponds to 5.5 times the income level of families, compared to 11 times in both Singapore and China. Alberto Argental, professor for Getúlio Vargas Foundation in the Brazil Journal newspaper, stated that the wealth prices are above the equilibrium level. They have not reached bubble-like proportion, also commenting that prices will reach a more normalized trajectory, and there will be not many major fatalities imminent, with at most a few defaults. Secondly, we need to consider that Brazil's economy is in a healthy position, and despite concerns over inflationary pressures, looks set to continue this pattern. Ike Batista, the richest man in Brazil and executive president of the EBX Group, recently stated to the BBC that he envisions at least 20 years of sustained growth. It's likely that the housing market will broadly follow suit, and the issues above are more likely to be in the short to medium term. Thirdly, demand for high-quality properties remains high, and the supply is still very low. The strongest argument for investment is the security of the lending market. Brazilian housing credit market remains slow, forming an estimated 4% of GDP. Brazil Finance and Real Estate pointed out that the average Brazilian mortgagor has borrowed 62% of the property's value, with the remainder 32% coming from his own savings. The organization also stated that financing period averaged at 15 years. It's not possible to finance property on the base of its future value, and the underwriting process used by all Brazilian home lenders is very rigorous. Finally, but not least, exchange rates are painting a picture of overvalued prices. Many comparisons of real estate prices between the US and Brazil, for example, do not take into account the large crisis devaluation of the dollar. It's also not fair analysis when commentators compare Brazilian real estate price with countries worst hit by the global recession, due to the large drop in valuation that have been seen recently. While there are genuine concerns that the property boom that Brazil and Rio in particular is currently experiencing may not be sustainable, there are also ample reasons to count on the property market here as a stable, viable investment. Well, if you consider the booming economy coupled with hosting world events such as the World Cup and the Olympic Games, it's certain that Brazil and Rio de Janeiro in particular is a great opportunity for property investment going forward.